September 1st, Thursday, market analysis, Dan Ehrlich. Currently around 9:28 California time. Okay, people, we are still oversold, and even more so in the stock market indexes. So this basically means we're getting even closer. Could be today. I thought it might have been yesterday. And we were oversold on Tuesday. So Tuesday, Wednesday, and Thursday, our special code is turned yellow on the daily data chart. This is a vertical bar chart, of course. Came down to a support level I had pegged around 390. So far has bounced off of that. The low this morning so far has been 390.04, pretty accurately bouncing off 390. And we're currently at almost 392. Call it 392, 391.90, whatever. Now, three important features about the market right this moment. And I'll go back so you can see the other indexes at the same time. Again, on the very top left-hand corner is the S&P daily data chart. It's fairly narrow, but it's there. And then the 1-minute chart next to it. The DIA in the middle in blue background, this chart here, daily, and the 1-minute next to it. The Qs and the Qs next to it, daily and 1 minute. And down at the bottom in the middle, we got the 2000 IWM, and next to it is a 1 minute. Real time, all of them are oversold, meaning below 25 on a custom ER RSI chart. Secondly, they all gapped down. This could be, should be, I think it is, a downside exhaustion gap. The end, for the moment, of a downside swing, producing some sort of rally very soon. Again, I think there's a good chance it could be today. Thirdly, the gap, we're oversold, and we're in a support area. I mentioned 390-ish for the S&P. So far, we're coming back on the DIA fairly well. We actually made a minor new high since the opening, but there is still a gap between the previous day's low and close. Yesterday closed smack dab on its rear end, making new lows in the last seconds, literally, and the settlement closing prices are right smack on the low of the day, or super close. Which is a historically indication that markets may turn around, well, frankly, overnight, which it didn't, or very, very soon. So we'll see what happens today. I'd love to have one of two things happen. A sharp rally getting back up to higher than yesterday's close, and if it can do it, higher than yesterday's high, but I doubt that. It needs to get up to 401 something or 402, 401 and a half approximately. And here we are at 91 and a half, so 10-point rally is quite a bit. That doesn't seem very likely. So having a bullish engulfing turning green, that's what would happen if we got above yesterday's high. We got plenty of time, 3.5 hours. The other thing is to close at least around unchanged, if not higher on the day by a little bit, something to tell us that the market had an exhaustion gap in the opening and rallied and stayed above the previous exhaustion gap on the opening. Of course, you won't see the gap if that happens on a daily chart in the future. You see it now because it's not closed yet. It will be somehow. The other one is simply to go sideways for the rest of the day. Now the range is about 5 points, which is not that big, not tiny either. But if we close reasonably close to today's lows, here we go. Tomorrow's Friday. Tomorrow we got a 3-day weekend in front of us, not just 2. Traders, investors, etc. tend to get rid of things that don't do well before the 3-day weekends, in particular because they're afraid or concerned that more bad things will happen to it over the weekend and it'll just lose more money the next day. And that could be a bullish situation or bearish, by the way, either one. In this case, it's a bearish. So we have a sideways trading range closing near its lows, and then maybe on Tuesday, Monday's a holiday, Tuesday we get a little bit below today's lows and then start to rally. And remember, we've got a 5-point range, not that large at the moment, and what I'm asking for, and I may not get it, is a sideways for the rest of the day. So on Tuesday, it wouldn't be very difficult to have a bullish engulfing. It's only got a 5-point range to overcome, a little lower, a little higher, after a gap which will stay on the books if we don't close it today. And then you will have an exhaustion gap, a bullish engulfing, and the beginning of a rally. I see it coming very, very soon, maybe today, maybe Tuesday, but that's my story about how this market's about to turn back up. I have some other corroborating information. Let's look at it. Crude oil. If crude oil makes new lows, it's going to do so since April, and it's not far away. Crude oil going down probably is friendly to the stock market. Certainly when it went up, it wasn't. Inflation. But we got a bunch of sell signals smack dab on top of this broad double top, possible broad double top. Needs to close below this dashed line to be a double top officially. And it is heading south. So there should be a lot of sell stops below these lows. Again, it'll be a new low since April 11th, or even maybe a new low since, February, end of February. Very profound. Maybe. Keep an eye on it. Next, corroborating information. Interest rates. Bond, 30-year long bond, also heading down. Now, down for interest rate futures means higher interest rates. So as this trends down, rates are going up. But guess what? It's oversold. And decently so. Like a week or so ago. And that is okay. Sometimes it gets oversold, bounces a little bit, and then gets oversold again. And sometimes it takes a couple of days. We took 3 or 4 days in here before it finally bottomed out. And I did get at the bottom of the interest rate market, meaning the top of rates, a buy signal for the futures contract with the ER strategy. ER3 trading strategy, ER1 and ER3. So, and I got a sell signal on top. That's really nice, both of them. And way up here, a sell signal also, and a good one that was rallying a little bit, not very much. These signals do not tell me how far the market's going to go. It does not tell me how far or how long it's going to last. It does tell me that it's highly likely that we have a turning point of significance. Being oversold in interest rates implies that it's about to bounce. If this chart bounces, rates go down a little bit. Also, at least a little bit short-term friendly to the stock market. So there's two reasons, and the most profound, most in the public eye: inflation, crude oil prices, and interest rates. So if they both flip, this going up, crude oil going down more by breaking out to the downside, then I think you will see that the oversold condition in the stock indexes will end up producing a little bit of a low. Ain't happening so far. And a rally. How far? Come on. How far can we go up on this daily vertical bar chart on the S&P? 400 seems fairly easy. Now that from here is 9 points. I don't have anything at 400 except a psychological big number. I'm looking at actually 407 to maybe 410. That's it. That's my upside rally objective next week. 407 to 410, 405 to 410, somewhere in there. We'll see how it pans out. I think I'm going to get it. Of course, I've got to mention that bear markets fall apart really fast and sometimes just don't do bullish things. They're hard to get to rally. They just want to collapse. So far, people don't realize in 2 weeks here, since August 16th, the middle of this month, last month I should say, we had a high of 31 and a fraction for the S&P on the high day, 31.73. We can call it 32. I'll call it 31. My upside objective was 30 from back when it broke out of the pattern on June 10th. So that worked perfectly. Overbought, resistance area, started to come down. I got my big bearish engulfing just Friday last week on the 26th of August. That was the quote-unquote nail in the coffin. Next day down, next day down, next day down, and today down so far. All of this week down so far. Today's Thursday. After that bearish engulfing. A whopper. So, I'm not bullish. I am bearish. I think this market is actually going to go down, next topic, into the October lows. Here we have a green bar that starts on the end of the week on September 30th, almost October, and goes to October 28th, the end of that week. Weekly data. I think we're going to go down into this green window of opportunity. This is the EC forecaster working, custom code, custom cycle forecaster, and it's marking October only. And in fact, I want to simply, I think, erase, there we go, the highs. Very flexible software. And now we're pointing to October every year, going back, I think it's way over 20 years, close to 30. I showed this chart the last few recordings every day, and it's got the October lows, a low, but there was a one lower, of course. A buying opportunity, not very significant. Very good, very adequate. Bullseye, slightly late, maybe a week early. Last year, great. Let's see how it pans out this year. It's give or take 5%, approximately 90% historically reliable that there will be some sort of significant buying opportunity in October. Period. Underlined. All right. That's it for woo-woo. Didn't want to do that. That's it for today. What are we doing? Looks like not too much. Resize. And we're sinking a little bit. 391, I'll leave you with that quote. I want to see 393 to start the rally. I want to see above 393.50 to start to close the gap. Or just sideways and then have a bullish engulfing on Tuesday. Remember, Monday is a holiday. You guys have a great Labor Day weekend. Thank you very much. Stan Ehrlich, signing off.